Guys, welcome to my channel where I talk about Bitcoin, but more specifically, I talk about Bitcoin mining. And today was a surprise because today I decided to buy some Bitcoin miners even though I did not plan on it. So I came across a deal that was so good, I simply could not pass it up. So I'm going to be sharing that deal with you and why I chose to make that purchase, how I underwrote the deal, and how I plan on exiting the deal, which I hope you'll find interesting, especially since we are now less than 3 weeks away from the halving. So it's really interesting because a lot of miners are selling their Bitcoin mining machines for cheap. And I decided to capitalize on this one opportunity. I'll show you why. I hope you'll hit subscribe and smash the like button if you're into this kind of Bitcoin mining content. Let's go ahead and jump into it and see why I decided to buy these 4 Bitcoin miners today. All right, so here we are, folks. I'm going to show you why I couldn't resist this deal. So I woke up, and as I normally do, I checked the marketplace over here at Compass Mining. And what I found is a very interesting machine at a very interesting price point. I saw this right here, this S19J for $61, which is unbelievable to me because the first time I got into Bitcoin mining in 2021, I thought that it was an unbelievable deal when I was able to purchase these exact machines for $5,400. If you do the math on this, it is now down about 98% in price for that one machine in particular, which I find amazing, astonishing. So check this out. Here's how I looked at this deal and here's why I bought it. First of all, $61, clearly that person is just fire selling that machine. They're just liquidating that machine. And I will show you some math in a minute, which I think kind of explains why. Look, we are less than 3 weeks from the halving. And so let's look at some of that data real quick. Boom, Clark Moody. We are less than 3 weeks from the halving. Of course, the halving taking place at block number 840,000. We are now less than 3,000 blocks away from the halving. This massively changes Bitcoin mining revenues. It massively affects Bitcoin miners and their positive or negative cash flows. And this explains what I think is a unique opportunity here, because Warren Buffett says, be fearful when others are greedy, be greedy when others are fearful. Especially right now, you have to be particularly cautious about what kind of miners you're buying and what kind of hash you're stacking, because, of course, it comes with a liability. And you could buy a Bitcoin miner that effectively you're paying a premium for your Bitcoin mining rewards through your hosting bill. So that's not efficient. If you're putting more money in to get Bitcoin, which is worth less at present value, then that's not cash flow positive. And I look at Bitcoin mining as a business, not just a way to stack sats at any price. I want there to be a price advantage for me. So there you have it. We've got one more difficulty retarget, and then we've got the halving expected to take place April 20th. So that's interesting. Now I look at this machine here, and I have a certain romance about the S19J because that was the first machine I bought. I got into a bundle where I was paying $5,400 per ASIC, and I thought that that was a screaming deal. And matter of fact, I still do, insofar as I'm glad I did that deal. Even though I overpaid for that machine, I'm still glad I did that deal because it got me in the game. And it's easy to be out there criticizing when you're not in the game. It's easy to criticize from the bench, but in order to win, you actually got to be in the game. And this is the most competitive business on earth, Bitcoin mining. So check this out. Let's run some numbers. Let's run some math, and I'll show you why I did this deal. And hopefully it plays out. Look, this could totally backfire on me, and I'm willing to take that risk. So check this out. Boom. $61. There's still one of these on the marketplace. I left that one just to see how quickly it would sell, because I bought 4 of these bad boys today. Let's look at the cost basis. Let's look at how much it cost. Let's look at how quickly I can turn a profit on these. Hopefully, no guarantees, but that's why I did it, because I think I'm going to make money on this deal. So here's the deal. The machine is $61, but all in, you have to calculate the first month hosting is prepaid. There's a deposit, which is equal to 3 months. They take a higher deposit amount because the less efficient equipment, they're holding a higher deposit because it's riskier to be in the lower efficiency equipment than it is to be in the highest efficiency like the S21. So even though the machine is only $61, I paid with a credit card, and I'll share with you at the end of this video why I chose to put it on plastic instead of using another form of payment. But I paid $808 per machine, even though the machine is only $61. Why did I do that? Am I crazy? Am I a nutcase? Or is this a strategic move that's going to pay off? Drop in the comments. Let me know if you think I'm a nutcase or if you think this is going to pay off. So look, boom, $808. That's inclusive of the $61 dirt cheap S19J hardware. The hosting deposit is $536, equivalent to 3 months. First month is prepaid at $179, little bit of sales tax and credit card processing fees. Let's run some numbers, folks. Let's run some quick maths. If that was my cost basis, check this out. We know the machine was $61. Multiply that by 4, it gives me $244 cost basis for the hardware itself. Multiply that by sales tax and credit card processing fees, because you don't want to miss out on your real costs. I like to underwrite things as conservatively as possible because I don't want to be surprised to the downside. I want to be surprised to the upside. Okay, so all in, my cost basis for 4 machines is only $284 and change or thereabouts. That's unbelievably low cost basis for hardware. So check this out. Those machines, and here's why someone is selling out, and here's why I'm buying at this price level. Current hash price, these machines are currently positive cash flow, currently profitable at current hash price. But guess what? That changes a lot at the halving and is always subject to change. Of course, there's no guarantees in this business. So using this hash price, I'm about to calculate a few things. 108, let's just call it over $100 a petahash. And that equates to, over here, you can see it equates to just over 10 cents per, let me zoom in on it, just over 10 cents a terahash, right? Just over 10 cents a terahash. So let's run some numbers real briefly, and I'll show you why I think this is a juicy and interesting deal. So I bought 4 machines at 90 terahash. That's 360 terahash. The person selling it is selling it probably because it's going underwater post-halving, which means that whoever owns these machines is paying more dollars in to receive less Bitcoin in value out at present value. So when hash price is affected by the halving, the block subsidy gets reduced by 50%. Let's just take that number, cut it in half, and half of 100 is 50, right?
At $50 hash price, this machine is underwater. But why did I buy it anyways? Here's why. My cost basis on these machines is, again, we covered that, 284, let's round up, 285. These 4 machines go online on the 9th of April. That means if the halving is on 420, stack it. If the halving's on 420, that means I should have 10 days of uptime with these machines. 10 days of uptime where at current hash price, they're currently profitable. And I'm hoping that it stays that way. It might not. But you have to look at it short-term, long-term, medium-term, every term. So the way I look at it at current hash price, if I take the hosting fee of $179 a month and I divide that by 30, it gives me about $6 a day hosting cost. I did that wrong. 179 divided by 30 gives me about $6 a day hosting cost. At 10 cents a terahash hash price, current hash price, which is going to change probably to it's definitely going to change, and it's definitely going to change to the downside short term at the halving, right? But let's look at the 10 days of uptime before the halving. If hash price stays at 10 cents, if hash price stays at 10 cents, at 90 terahash a machine times 4, that's 360. At 360 terahash, well, let's look at it at one machine, and then let's look at it for the 4 machines that I purchased. At 90 terahash times 10 cents hash price, that means that these machines are bringing in $9 a day in Bitcoin at present current value, which is of course subject to change. Do your own research. But the way I look at it, if hash price is what it is today, it's bringing in over $9 worth of Bitcoin daily. You have to factor in downtime as well, because these machines are not online 100% of the time. But even when you factor in downtime, I'm looking at about $9 a day in Bitcoin that I'm receiving. And we already covered that my daily hosting cost for each machine is $6. So if each machine's bringing in 9 and I'm paying 6, that leaves me with a positive 3. If I multiply that out and I have 10 days of uptime, that's 30 a machine times 4 is 120. What's interesting about that is if I get 120 positive before the halving, 120, and I divide that by my hardware cost basis, not inclusive of all the deposits and everything else, but if I just divide it by the hardware cost basis, 120 over my hardware cost of 284 and change, give or take, equals 42% return on my hardware pre-halving. That's just in the 10 days pre-halving. Now, why am I not including the deposits, et cetera, et cetera? Well, because I plan on selling these machines. Why? I believe that market conditions will improve. I believe that because I'm long Bitcoin fundamentally, because I believe that Bitcoin is going to enter new highs and new territory, that will certainly benefit miners if that is true. So we're doing math here knowing that the halving is only a few days away, only about 19 days away. This is why people are selling their hardware for a liquidation fire sale. And I'm buying it because the price is so low. And fundamentally, I believe I can hold on to these machines and they will increase in value. It's speculation. There's risk. And I take responsibility for that risk. But the way I look at it, those numbers are very interesting. And what I plan on doing is selling as market conditions improve. I plan on selling these machines to a willing buyer at a higher price when these machines are more appealing, even though it's a older, less efficient than the new equipment. It's an older generation machine at 34, 35 joules a terahash that the S19 is operating at. I believe these machines will still benefit from overall market conditions improving. And I do believe that it'll be worth a lot more than $61. Furthermore, we just saw how if I get 10 days of uptime, I could get 42% of my hardware cost returned to me just in those 10 days. And that's a pretty good return. But again, I need to also factor for the fact that I may go underwater, likely. More than likely, this machine will go cash flow negative. It will go underwater because it's not the most efficient machine when the halving happens. And at 5 cents a terahash, we could do that math real quick. At 5 cents, if I'm making 5 cents a terahash, then 90 times 0.05 is 4.5. And if my hosting cost is 6, then I'm paying $1.50 negative every day. And so that is why someone's letting go of this machine, because they view it as a liability. I view it as an asset because I believe I can hold it. And overall, I believe that as market conditions improve, I believe that this machine will increase in value. And when I sell it, then I will, of course, have my deposit returned. And I will also have gotten Bitcoin out of the deal. And so here's how I financed it, and here's why I chose to finance it on a credit card. Because I can stretch out the terms where I paid over $3,000 for these 4 machines, and I can stretch it out such that I'm making a payment over 18 months. And so I'm shorting fiat, I'm shorting the dollar, kinda, I guess you could look at it that way. And I'm longing Bitcoin in that sense. It's risky. Of course, there's risk to all of this. I'm just showing you guys how I'm playing this today. I didn't plan on buying this hash, but when I looked at it and I see the hash as cheap as it is, I like that price a lot. So I bought 4 machines. Let me know if you think that was degenerate, or if you think that that's going to play out. Let me know if you think I'm going to lose money on this deal, or if you think I'm going to make money on this deal. But furthermore, by putting it on plastic, I'm also going to get Bitcoin. Day one, I'm going to get Bitcoin rewards from my hash power. So that first month of hosting fee is prepaid, and that comes back to me in the form of Bitcoin right away. So I plan on buying these machines, holding them until market conditions improve, and then I plan on flipping out of them, hopefully at a profit, and I also hopefully stack some Bitcoin in the meantime. I appreciate you guys tuning in. Hopefully this purchase works out for me. I'm interested to hear whether or not you have any questions, and I'm interested to hear whether or not you think that this is going to work out. It's an interesting time as miners prepare, brace themselves, and also take speculative positions like the one I discussed in this video before the halving, which is in less than 3 weeks. Check out the Proof of Workshop over at Skool, Skool, where we will be discussing the intricacies and the inner workings of Bitcoin mining from my experience, but also from my peers who are even more experienced and have industry knowledge and insights. Over there, we are discussing the business of Bitcoin mining, the business of securing the blockchain and earning Bitcoin mining rewards and stacking those sweet sats. So hopefully you're out there stacking. Happy hashing, and I will see you guys on the next video. Peace.